I'm Angeline Ong, and welcome to Beat the Street, the show that gives you the tradable news and data you need ahead of the Wall Street Open. Coming up, US stocks are being eyed after the S&P 500 breached the 5,000 mark for the first time. As Axel has said many times on the show, investors and traders love rounded numbers. We'll get to that in just a moment. PepsiCo reporting a very rare sales decline, so our higher prices starting to bite. And Cocoa Crunch, global cocoa prices hit fresh record highs due to weather and also dry weather in West Africa. Now, a very warm welcome to you. I'm Angeline Ong, and welcome to this edition of Beat the Street. Not long now before Wall Street starts trading, let's just have a look at the Dow Jones Industrials, because I can tell you that it is cautiously, this is the hourly chart, ticking slightly higher there. But as you can tell, it comes from a really, really high base already. Because we've had not just the Dow, but also the S&P 500 hitting all-time highs. Let's just show you the S&P right here, whereas the Tech 100, let's show you the Tech 100 first, also closed less than 2% away from its peak. So quite a major ride there for all those in the market, expecting some sense of exhaustion now, at least, some of the froth coming off the market. However, it hasn't just yet. And so we're turning now to Axel Rudolph, who has been looking at the technicals for the Dow.
Well, Angeline, with the S&P 500 and the Nasdaq 100 hitting all-time record highs, the Dow hasn't quite managed to do so yet. And as we can see here on the daily chart, we're very close to hitting last week's high. And perhaps testing the 38,800 mark, above which we also have the psychological 39,000 mark. And we'll have to see whether we can perhaps extend this upward move towards the psychological 40,000 mark. And that is the question on everybody's lips. And don't forget, we've seen over the last 15 weeks since the October lows, if I'll go on to a weekly chart here, 14 consecutive weeks of gains except for one. So a very strong uptrend indeed, taking us higher. And at the moment, there seems to be nothing stopping us from advancing further, making new record highs, even in the case of the Dow Jones Industrial Average. From a technical perspective, basically, we want to stay above the October to February uptrend line, which today comes in around 38,475. And then more importantly, below the last reaction lows. You can see a reaction low is simply a low, which is lower than the one to its left and to its right on the daily candlestick chart. And the last one here was made at 38,209 on Monday of this week. So as long as we stay above there, the trend is your friend, and it's still pointing higher.
Thanks very much, Axel. And as you rightly say, it is interesting because it's also quite close to that 39,000 number, another round number. Well, let's take a look at earnings now. PepsiCo could be the mover at the start of this session after reporting good fourth quarter numbers, but revenues that miss forecasts. IGTV's Jeremy Naylor is with me now. Jerry.
Yeah, it's been an interesting set of numbers, actually, from PepsiCo. The numbers themselves were quite good, given the current environment and the squeeze on household budgets. But the management at PepsiCo have been given a salutary lesson in just how far consumers can be pushed in terms of raising prices. We saw prices up right the way through the pandemic, and people with lots of cash were quite prepared to pay this. But all of a sudden now we've got household budgets and the squeeze. I think it's a very different picture. And as I said, management are learning this very fast. Let's take a look at the figures as they broke this morning. Earnings per share, $1.78 adjusted against the $1.72 expected. So that was 6 cents better than the markets have been looking for. And up substantially, it has to be said, from the 37 cents we saw this time last year. Revenue, $27.85 billion. That was just round about the $28.4 billion expected. The revenue number, though, was down from last year, albeit only slightly by a margin of 0.5%. But as you said at the top, it's the first quarter of revenue decline in 4 years on a year-on-year comparison. Why? Well, analysts say the business is seeing what they say as a pushback on higher prices that the company wanted to charge, not just for its flagship Pepsi Cola, but also among its food snack business as well. It was a natural reaction to fend off higher costs rising from supply chain disruptions and general inflation. But Carrefour, Europe's largest food retailer, in January asserted that it would not be stocking PepsiCo's brands due to unacceptable price increases it wasn't prepared to hand on to its customers. Let's take a look at the share price chart. A couple of things going on here. Just above where we are, we closed out yesterday's session. It's not an all-session stock, so you won't see any follow-on from the earnings out this morning. The stock closed yesterday at $173.86, just below this line of resistance at 174.85. But we're being told by the early market makers that we've got a 2% decline around about that now penciled in on the stock at the start today. So that would take it down from the 173.86 to 170.40, which is the line I've drawn here. We've got this triangle pattern here. This is an ascending triangle pattern. You've got that peak that we've seen there from the 174.85. Subsequent to that, we've seen another touchdown here. It doesn't look like it's going to test that again today. So I think on balance, if you're short on this, you put your stop above that line, stop at around about the 175 level. Price target down here, which is 165.90. It's quite a distance away from the 2% decline. But I certainly think that PepsiCo, looking as though it's going to drop at the start today, it's just by what degree. But a short while ago, I was looking at some of the initial indicators. A 2% drop was pretty much in the bag. Just a question of whether or not it's going to go any further on down from that. The company is also predicting a weaker first half of this current year as product recalls dent its North American business. So I think there's a lot of headwinds for this particular company. But I think, as I said to you, that the salutary lesson has been learned, that the company can't just keep on putting up prices, expecting consumers to pay for inflation that the company's having to deal with. Back to you.
Thanks very much, Jerry. And funnily enough, I'm also looking at the same numbers that you're looking at. And we're all watching that, it's first touch here, as you can see, 4th of January, and where my arrow is, looking out for that potential second tentative touch, which would show, and a third, of course, would validate any form of technical analysis that needs the wicks touching the lines. But it does look like there is downward pressure there. Looking at Catalent as well, quarterly sales falling past estimates. This is not a stock that you can trade all sessions, but it has had a huge amount of interest recently, not past in the past few months rather, due to M&A as well, because if you've been following the news, Novo Nordisk, or rather the parent company of Novo Nordisk, Novo Holdings, has said it would buy Catalent to secure its manufacturing, its fill and finish capabilities. As you know, the space is getting ever crowded. The weight loss drug space and demand is only expected to increase. And therefore, Catalent, as a manufacturer of these fill and finish syringes and injection pens, well, it's got a strong outlook if you cover this sector. And recent mood music from this sector suggests that even with current capabilities for fill and finish in this sector, it is not possible or not going to meet demand for both diabetes and also weight loss drugs. These two included for drugs that need fill and finish capabilities. And finally, it's a huge week next week in terms of earnings. We've got loads more from the banking sector and also from Europe, but we also have still quite a few big names in the US reporting, like Coca-Cola. Meanwhile, speaking of sugar, I just want to show you cocoa prices because we have had cocoa prices, global cocoa prices, hitting a fresh record high as dry weather hurts crops in West Africa. The cost of the key ingredient for making chocolate now roughly doubling since the start of last year. Soaring cocoa prices already filtering through to consumers and squeezing many major chocolate makers. One of the world's biggest chocolate manufacturers, Hershey, has warned that historic cocoa prices are expected to limit earnings growth this year. And of course, all this coming just before Valentine's Day. Now, before we go, a quick look at how the market is looking, especially since we're on the cusp of the year of the dragon, seen as good for business and seen as rather prosperous for markets. Wall Street, which is the Dow Jones Industrials, still edging slightly higher as we look at the hourly chart for you. There you have it. And also, let's just check on the S&P 500, as this also breached a key point yesterday and continues to look like it is going to be a stronger open as we count down to the year of the dragon. That's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.